Hello everyone, welcome to TTT Markets. I am Fotis and in this video I'm going to discuss with you how to trade Japanese yen crosses and also how to trade Bank of Japan events. So the first thing you need to do is look at the calendar. Why should you be doing this? Because trading JPY crosses is quite a volatile trade. It could be a high volatility event, so you need to pay attention. If you trade this during a period that we have significant economic releases, you need to be aware of this so you can pinpoint the entry and manage the risk and the stops a little bit better. So let's go to the calendar. That's the first step. So here we go. I have in front of me the calendar, not only for the day ahead, but for the week ahead. So today, the day that I'm doing this video is Monday, December the 15th. What do we have ahead? We have an important Canadian dollar release, it's inflation, which I am not interested because I'm not trading the Canadian dollar. So if you trade CAD yen, this could be important, but since this is not my main focus, I'm leaving this alone. It would be important though to be aware how much inflation is in Canada, because this could affect other areas too. But as I said, I'm just moving forward. I'm not paying too much attention on the Canadian dollar. The important events for me, because I am trading those currencies, they begin on Tuesday, December the 16th. We have important events coming out from UK, Europe, we have the PMIs, we have unemployment in the UK, we have manufacturing PMIs, and very important, retail sales, unemployment rates, PMIs coming out of the US. Then on Wednesday, we have again CPI, that's inflation for the UK, and we also have New Zealand dollar again. I'm not interested, but Thursday, this is a super Thursday. Why? Because we have monetary policy decision for the Bank of England, the same thing happening for the ECB, the European Central Bank, and then later during the day, we have inflation for United States. And finally on Friday, well, this is happening at the early days of Friday. It's from Thursday to Friday, depending on which time zone you are. We have the Bank of Japan interest rate decision and monetary policy statement, extremely important. Why am I mentioning all this before the Bank of Japan? At the beginning of this video, I said we are going to discuss Bank of Japan events and we are going to discuss yen crosses. Because please remember, the Japanese yen is not on its own. There is not a single currency called the yen. We have dollar yen, we have euro yen, we have pound yen. So it's not only what is happening with the Bank of Japan. If we are in a period that we can expect other important economic releases from the other currencies, it is important to pay attention because this is going to generate volatility. But I'm going to show you how we identify the main theme against the smaller macro themes. The main event, in my humble opinion, is this, the Bank of Japan event, and I will explain very soon why. But we have other events too. Let me give you an example. Let's say you trade the pound yen. Well, we have important economic releases on Thursday, and before Thursday, on Tuesday, we have, where is it? Right here. We have data regarding the unemployment state in the UK's economy, the UK status in the UK's economy. What is happening there? We have indication that in the UK things are not going so well. The consensus is that we are going to get 22.3 versus 29,000 previously. But we experience that labor market conditions are losing momentum over the course of a year. This is something that has been picked up by bank analysts, and especially ING says to expect worsening conditions and smaller growth. So you can imagine if we get a negative surprise, if the number is less than 22.3 thousand, this is not going to be good, and it is going to affect the British pound. But because we do have this main event on Friday, the movements are going to be capped because we have this main event coming up. So without any other delay, let me go to the chart, because I think in this way you will understand better. And I will not start with the dollar yen as you can see here. I will go on with the pound yen. Let me remove the one-click trading. And this is what I see. And here is the secret if you wish to trade this successfully. Do not try to guess what is going to happen. So we have interest rate decision not only from the Bank of Japan but from the Bank of England. We have unemployment figures. ING and other banks are telling us that the economy is losing momentum, not only in the public sector but also in the private sector. Jobs growth is not so good. So you might say, hang on, well, if it is going bad and it is breaking the trend line, let me just sell and we can get a target to the downside. This is the 21-day moving average, this is the 63-day. And I am using moving averages that represent a month, a quarter, this is a year, and so on. You get the idea. So if you are purely a technical trader, you will see this and say, it is broken. Let me sell, and the target could be lower, the economy is deteriorating, and so on. But volatility can kill you, figure of speech, it could kill you trading-wise, and this is only because of the larger volatility, the larger than expected movements. So you see this here, there are economic releases coming out. Who says that simply because we draw a trend line, it cannot come back up here and take out the previous highs? Maybe you decide to sell here, place a stop above, and remember guys, this is the pound yen. It's so volatile, it comes back up, takes out your stop, and then maybe can continue lower. I don't know. This is the thing. I am not trying to guess what will happen. Or even worse, I am not selling, and then I have some kind of wishful thinking. I'm starting praying that I'm selling here, and I'm praying it doesn't go back to my stop, and I pray that it will continue lower. No, we do not do this. Please remember, we are going to have this week high volatility. It is the week before Christmas. We have extremely important releases from 3 central banks. So you need to pay attention to this. You could be right about the direction, but if you do not use the right stop, and the right stop is not anywhere below the trend line, so if you put your stop, for example, there, it could easily get triggered. So you could be right about the direction, as I was saying, it comes down, but your stop gets hit because of high volatility. So you need to be aware of this. Let me show you Euro Yen. This is another trade that I'm keeping an eye, I'm paying attention. So this is the Euro Yen. What is happening here? What is the trend? You can still see the trend is up. The moving averages are pointing upwards. The MACD is positive and green. The RSI, yes, it's moving lower, but it is above 50. We are even above the trend line. Do you go ahead and sell here, right on the trend line? Do you see my point? Instead of trying to guess what will happen next, I'm trying to figure out where is the best area to do business. This is not the best area to do business. Why? Because the risk reward is not good. I'm not saying that it cannot clear this trend line and it cannot drop much lower. Guys, it could drop 1,000 pips as far as I am concerned. But that's not the issue. The issue is, where is my entry and where is my stop? I see here we have previous highs that act now as support. We have a trend line. I'm not going to stop here. I need some kind of pullback to the upside, some small correction, so I can sell as close to the resistance as possible. And looking at this chart, perhaps euro-yen is not the best way to express my macro theme, to express my narrative, to express my view on the outlook. Perhaps you have guessed I'm looking to go long the yen, but it doesn't mean that I will go long yen anywhere. I need to choose the area very carefully. What about Aussie yen? What is the theme we trade? This is another thing you need to ask. What theme do we trade? Here is the Aussie yen. I will click there, choose the trend line. This is my trend line. Again, the trend is intact. We do not have a change in trend. We have a correction in the main trend, but we haven't even broken below the 21-day moving average. What theme do I trade here? Well, if we have a situation, I showed you the economic releases earlier. If we have bad economic data, then yes, this is going to have a negative impact on the outlook. It could affect stocks in a negative way, and the yen could strengthen. And the trend line and the moving average, the price could penetrate through them and break these levels and move below. But am I doing business here? No. Definitely Aussie yen, I can tell you, is high on my watch list. I'm paying attention to the fact, and let me draw a trend line here. I'm paying attention to the fact that we have some series of lower highs and lower lows, but I am not selling the low. I would be interested, maybe depending on the situation, to sell closer to resistance or to be more active if we finally break the trend line. But I will not sell the low. Please again, remember, we have a situation where we could face higher volatility, we have important releases on the academic calendar, and these are smaller macro themes that I'm describing now, the stock market, what happens in Australia, and so on. The main theme is what the Bank of Japan is going to do. This is my main theme. And finally, I will come to this. This will dictate what happens next, the dollar yen. So I showed you the Aussie yen, the pound yen. When you trade the pound yen, of course, it has to do with the yen, but it is also about the Bank of England and what growth is doing in the UK. When it comes to Aussie yen, this is about stocks. It's not only about the Australian economy. The Aussie yen is a typical currency that moves lower when we have a negative performance in stocks. So if stocks move down, the Aussie yen will move down. However, if we have a Santa rally, then no, the Aussie yen, it will not have a strong trend to the downside. What about the dollar yen? And this is the main chart. This is the king of the charts right now, trading this theme. Why? Because right now, at the time of doing this video, we have different central banks. What do I mean by this? We have a divergence in central banks. We have expectations that the Bank of Japan, for the first time after 30 years, will increase interest rates. And we have a situation where the Fed is expected to lower rates. So that could be a pretty strong signal to sell the dollar. And as you can see, I showed you pound yen, euro yen, Aussie yen. The dollar yen is the only one so far that is moving below the 21-day moving average, and it is the only one that it has broken the trend line. So you might say, great, sell this. Not so fast. Again, do not sell the lows because it doesn't give you a good reward to risk. Is it breaking the trend line? Great. Wait for a small correction. wait until it tests again the moving average or this smaller trend line. We are going to have volatility. We have releases both for the US economy and the Japanese economy. What happens if we have a volatile session and you sell, it comes back up? This is another important trend line, tests this, and then it continues lower. Imagine if you placed your stop there, gets triggered, and then it goes down. So you need to choose very carefully where you place your stop. So for this session, I would place my stop above this level, okay, above this trend line, so you can see this. And I am not selling the lows. I wait for pullbacks and I'm selling into resistance. But what about the macro? Because yes, there are expectations for higher rates in Japan, lower rates in the US. Is this going to happen? I am not convinced yet. What I just described is very likely. But there is another theory that says that inflation is quite high in Japan. It could be close to 2%, even higher. There is strong pressure in prices when you go to the supermarket and so on. The consumer feels inflation in Japan. So even if they go ahead and raise interest rates by 1/4 of a basis point, that's 25 basis points. It means nothing. Inflation is still higher than interest rates. So whatever impact we are going to have from a hike in interest rate in Japan, because of the higher inflation, the impact on the yen is going to be minimal. We are not going to see significant support of the yen, significant strength in the yen, because inflation is much higher. So let's wait and see the statement, what happens, and so on, because we could have a situation where we hear the initial release that they are hiking rates, but they are raising rates. We have a move down, and then during the interview, they go ahead a little bit later or during the statement. I don't remember if there is going to be an interview, and they buy the low, and it moves back up again. So can you see that sometimes it is not crystal clear? We have a situation right now that this is a binary event. We could have a strong trend to the downside, but it could also move only for a little while before it continues higher again. Unfortunately, we are at that kind of regime where you have to be careful. And the secret to trade the Japanese crosses is this: pay attention for reward risk. Pay attention where you are going to place your stop. Do not think, oh, it broke, it will go to the 200 moving average and I'm going to place a tight stop so I can manage my risk. No, this is not the way to trade Japanese crosses. You need to allow for more volatility. So if you trade the Euro USD, for example, you can get away from 40, 50 pips stop losses. You cannot do this with yen crosses. It needs to be higher than the daily range. So it needs to be more, I would say even more than 100 pips, 110, 120, 130. Maybe in the case of pound yen, it could be even a little bit higher because this is quite volatile. So pay attention to this week. Pay attention to the main themes, and the main theme, of course, is the US dollar and the Bank of Japan. What message is the Bank of Japan going to do? They might hike, they might raise interest rates, but they might say, that's it. We are going now to look for data, so don't expect another hike anytime soon. So that's a dovish hike, and it is going to cause a short time drop in the dollar yen, and then it moves back up again. So pay attention to your stops, pay attention to asymmetry. That means pay attention so that your reward is higher than your risk, and allow for volatility. Pay attention, as I told you, Here is the Aussie yen. Pay attention to the theme you are trading and pay attention to the releases. Now the Aussie yen is moving down because we had also some negative data about China. It's not doing so well, but still the trend is up. Do I sell this low here? Absolutely not. Wait, we don't even have a signal in the MACD or a clean signal in the RSI. The pound yen. This, okay, I take note, but the trend line is broken, and again we have a series of lower highs, lower lows, but we have also data coming out from the UK economy, and the most important event, here is the tricky part, the most important event is the Bank of Japan. This is released on Thursday, from Thursday towards Friday. Pay attention, this could dictate what happens also in January and in the first quarter. What happens this week could dictate the next moves for the next quarter ahead. Why? Why am I saying this? Because we have Christmas, we have a holiday season, the markets will be closed, low liquidity. So the markets are going to take into account what the central banks are saying, and when liquidity returns at the beginning of January, we are going to experience stronger moves again. So this is our today's video. I hope you enjoyed how to trade JPY crosses and Bank of Japan events. We are going to see you soon at another video here at TTT Markets. Thank you for watching.